G'day folks, welcome back to another update. Today we're looking at platinum, US crude, the US dollar. Now platinum is rising and the US crude oil is dropping in terms of pricing, and the US dollar is consolidating. Now just watch for divergence, especially for platinum and US crude. There is a divergence on both of those. If we go any further, make sure you hit that like and subscribe button to support the channel. Looking at the outlook first off, as of today's February 7, the commodities and currencies market are experiencing notable shifts. Platinum prices have been influenced by strengthening US dollar, which typically exerts downward pressure on precious metals due to the inverse relationship. In crude oil, US oil futures have declined to their lowest levels this year, primarily due to rising domestic supplies and uncertainty stemming from recent tariff disputes. Despite Saudi Arabia's increase in crude prices for Asian buyers, signaling robust demand, these factors have outweighed the positive sentiment. The US dollar has strengthened, bolstered by higher interest rates and its status as a safe haven asset amid global trade tensions. This appreciation has contributed to the observed trends in both platinum and crude oil markets. So first looking at platinum, we always look at the long-term trends first. So we've got the monthly here. Now we don't have a CCI drawn up for that, but you'll notice there it's been consolidating in this range now for a number of years. So very flat price movement on the monthly. On the weekly, likewise consolidating, but we've got smaller peaks and troughs. It's actually broken out recently in the last few weeks, since late January, to a bullish move above the moving averages of the CCI and the price, and that gives us a bullish momentum. And to learn how to draw these moving averages, by the way, they're in the description below. There's a video there to reference. So bullish movement at the moment on the weekly. On the daily, if I zoom into this one, since our last update, you can see there it's again had a bit of a decline, bounced off this support at 901.60, and ever since then it's been pretty much bullish since around the start of January, as I said. Now it actually dipped slightly below here, middle of, well, that was late January, I'd say, and then it broke above again on the 29th of January and been bullish since. Now it's hit this minor resistance at 996.60, but just be careful. We always look at the smaller time frames to see what impact that may have on the larger. So if you're trading on the intraday time frame or the daily, you should always look at the hourly here as well. So the hourly here, you can see there it's hit this resistance, but what we look at here is a divergence. So we've got the peaks or the highs of the CCI dropping on that period there on the hourly chart, and that equates to that period on the price chart. So lower highs on the CCI versus higher highs on the price. And what we expect, assuming it pulls back from here, and it may continue to rise higher, of course, if it breaks through that resistance, we're going to continue monitoring it. But if assuming it does start to pull back, well, then we draw a Fibonacci down to that recent low before that divergence started, and that'll be our initial target area in terms of a price movement. And when I say target, I don't trade these divergence. I'm simply expecting this to pull back at some point. So the way I'll use this is if I'm going long during this period and I start seeing a bearish divergence, then just be careful. You may want to start taking profits, or just be careful of how far the price potentially may go. The first sign of a divergence would have happened back here. You can see there between those highs there. Let me just draw that. So between that period, that was your first sign of a divergence. On the CCI, you can see there between those peaks, and then it fell off. So that already executed, and since then it's been rising. So just be aware of that. We may see a pullback at some point. Next, we look at the crude oil price. Now here on the monthly, you can see there it's actually in a neutral positioning in between those moving averages on the CCI, giving us a neutral positioning, but notice the price is below the moving averages, giving us a somewhat bearish outlook. So predominantly I'd say bearish to neutral on the monthly. On the weekly it was bullish for a number of weeks, and then it's finally broken into those moving averages on both the CCI and the price chart, again giving us a neutral stance. On the daily, it bounced off this support at 66.54 a number of times, and it's bounced down from this minor resistance at 79.60. Now we're expecting it to fall further. You can see there on the daily the CCI is still dropping, so no long trade should be taken. But at the moment, let's look at the intraday chart, the 1 hour chart, and see if it's giving us any signals. So again, even though the daily is going bearish, we should always be aware of any divergence, and here we've got a bullish divergence. You can see there higher lows on the CCI versus slightly lower lows on the price. Now again, if this is to pull back, I'd be drawing a Fibonacci from that low, take it back to that recent significant high, which would have been that area, and we expect it to hit as a retrace that 23-38%. That's a minimum level it hits. It could, of course, and more often than not, it actually hits this range and bounces and continues in a downtrend in this case. Sometimes it breaks right through. Now, one thing to notice is if I zoom out, there have been some very minor or small divergence. I'm just trying to find one here to demonstrate. I can't see any here. So that normally the CCI 150 moves in line with the price of the peaks and troughs, and that's what you want to see. With the exception of these, you can see there's another bearish divergence back here, and the price fell off quite strongly, hit our minimum target. And in this case, if I draw Fibonacci between that point, it fell well below 100% retrace level. And lastly, looking at the US dollar, back here on the monthly, it's broken above the moving average of the price and the CCI 150, giving us a bullish momentum since November 2024. Now you'll notice back here we had a very long-term bearish divergence. We had a couple of them actually. One there, a smaller one there, pulled back, hit its target, and a larger one there, it's also pulled back. And notice here it's actually been bouncing in that consolidation in that 23-38% Fibonacci retrace. Now since then it's broken out of that range and giving us a bullish momentum on the monthly chart. On the weekly, I'll zoom in for this one again. Bullish momentum back here since October 24, both on the price and the CCI. Now notice the CCI is broken into that moving average range, giving us a neutral signal. So avoid going, if you're trading on the daily, avoid going long or short on this one, because it could actually fall further, and that's just a weakening sign. I'd like to see this break higher on the weekly, on the CCI, to be more bullish. And if we go to the daily chart, you can see there hit this resistance at 10,990. Broke down again. We had another bearish divergence, a small bearish divergence here, hit the minimum target, and this one probably around the 61% level. Let me just draw that one. So if I zoom in, that would have been back to that level there, that low. That's at 23-38% level. You can see that the price bounced off that 61% Fibonacci and made a recovery, and then it's starting to fall back again. But notice again on the daily, we're in a bearish momentum, both on the CCI and the price. Now, if we go to the intraday chart, see if that bearish momentum is going to continue. At the moment, you see there the CCI has moved higher lows, and so is the price. So there's no divergence, but at the moment, bearish on the CCI and bearish on the price as well on the hourly. So theoretically, you could take short trades, even though that's bounced. That would be a short trade to take, which is in line with the daily bearish momentum as well. We did have back here, we did have a bullish divergence versus lower lows on the price. You can see there hit at minimum target. This one went almost as high as the 100% retrace level. And back here we had a bearish divergence as well. This one fell. I would have drawn a Fibonacci back to that low. So take it back to that level. I didn't mark the target area, but you can see there it broke right through that 23-38% level, and that's similar to the daily. It bounced off that 61% level and bounced higher, and that also aligned with this very bullish divergence as well. So always pay attention to the divergence, and never ignore them. In this case, if you're going short, be aware that the price would have bounced at any moment. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.